Welcome to video lesson 5. In this one, we're going to be talking about the money tree of 3, which is basically the 3 categories that you need before you even take a trade. Okay, so let's get right into it. So money tree of 3 stands for direction, setup, confirmation, and confluence. Okay, so first we need to establish a direction, then we need to find our setup, and then we can use confirmation and confluence. All about direction. So BP system is just breakout pullback system, which we'll go over in an actual chart. First question you need to ask yourself is, where is the breakout? Okay, so when you're on your charts from a higher time frame, we need to understand where the breakout happened. Okay, and we can have breakouts in either a channel, a trend line, break and retest, or a pattern. You'll learn about patterns later. Where is the week, day, and H4 heading? We need to understand the objective of the higher time frame. So this is going to play a part into the storyline of where we should be entering and exiting our trades. And what I mean by that is, so for example, if we have a weekly objective that we need to obtain, then we can take scalps all the way until the weekly objective is obtained. Or you can play it intraday, however you want, or swing. Who's in control of the volume? We need to look at the volume and see if there's more buyers or sellers in the market. When we identify that, then we can have a better bias of which way we should be trading, along with our market internals. Important levels that we're going to cover that you need to have on your charts are DM levels, which I'll explain, QM level, and SNR levels. Okay, so I'm going to go ahead and go to a live chart. In the next video lesson, it's going to be all about setups. So okay, so in here, we're going to go over the breakout pullback system. Reason I searched this, what are ticker reasons? I just wanted to give you guys like an accurate definition versus my definition, so you guys would know exactly what a tick reading is. It's basically just the it's the New York Stock Exchange advances and declines. So the advances minus the declines. Okay, so if you guys are wondering exactly what the tick is, you can just look at that. But ticks are something that I've been using in options for like 4 years, so they're very important. Okay, so just looking based on the daily, you can see we have a breakout. Okay, so this is where your breakout is, and here's your pullback. Okay, you also have a breakout here. Okay, but we never really got our pullback unless you consider this a pullback. But we just need to understand how the market structure is, right? So we have low, high, higher low, higher high, lower low, right? So our breakout is occurring here. This is where we really confirm a breakout on our daily. So we can safely assume any sells within our breakout area, the pullback area, that we should be looking for opportunities to take sells on, okay? If we also look at some sort of trend line, okay? Something, let me use our line chart. Okay, so see here, we have a trend line, breakout, pullback. Should be looking for buys at the pullback area to our longer term trend line, right? And I don't use anything specific with the trend line. It's just something I use for more of a confluence to see my actual direction. And we can see the direction at this point was up, right? We bounced, and then made higher highs along the way and higher lows. Okay, so once that started breaking down, breaking down here, pulling back, this is our new area, right? Now we have another trend forming here. Okay, so from this trend, should be expecting a pullback here. If we break out, then we understand that we can use this as a continuation of our trend line to continue higher. Move these drawings real quick. So when it comes to the breakout, we need to understand if we're here, we understand that if the market wants to start trending up, then we should be taking buys up to certain levels, okay? So from here, we'd obviously start looking for sells if the market wants to sell. If it wants to continue, it'll break out of the trend, retest, and go higher. Something else I like to use is, So there's a reason I use Renko charts for SNR levels is because it gives me whole numbers. Okay, so when I'm looking at my chart, I'm looking at whole numbers, okay? So we can see we have an area of resistance here. We have an area of support here being tested right now. So we have a breakout pullback, okay? And I do this for H4 and H1 and daily. But daily, it's a little more difficult because you're not going to get as much data. Okay, you can see how that support level that was now turned resistance had been tested here, came back, tested again, dropped, tested again, dropped, okay? So we understand that we had a breakout here, right? So this would be a SNR breakout level. Here we have a resistance level in line with a QM level. Okay, so this area right here would be something that I'm looking for some sort of confluence in, okay? Because I have a QM level, I have my support and resistance level here, and if the market makes its way back up, I can start looking for sell opportunities on a lower time frame. Okay, so when we see our QM levels and we identify these, we also need to be identifying our supply and demand areas. So we can obviously see one that was right here, and then we can also see one that's right here. And why this one? Because we have a trend line confluence here, so we can also look for sells in this area, okay? And then based on our setup models, we also have an SNR2. So SNR2 from here, okay, which you guys will understand in a later video. We also have a daily QM up here, so we can also mark that out, but we don't need to because we're so far from price and we don't want to clutter our charts. But when I'm trading and I'm intra and I understand the direction that we were in a breakout pullback zone, I can trade, right? So for example, without having to use higher time frame, I already know, okay, I have a resistance level here, I have a QM level up here, so I can stay on my M1s without really needing to flip back and forth. The only reason I would need to flip back and forth is current price action developing, right? So as the price action is developing, I can look for new supply and demand zones, new support and resistance zones, new QM levels, etc. Okay, so if we look on the daily chart, when I want to see QM levels, which we're going to have a whole video on QMs, okay, I can look in these areas. Even though this one got blown through, we still mark our QM level. Low, high, lower, low, higher, high, okay? Low, high, lower, low, higher, high. This would also be QM level. Okay, now let's talk about DM levels. These are also levels that we need to mark out on our chart. So what is a DM level? It's basically a double Marubozu candle, right? So 1, 2, and just the wick. Okay, so we just pulled a wick. Okay, this is also a level. 1, 2, this one gets traded through already, so we don't need it. This one has no wick. Okay. 1, 2, we have a level here, a tiny one, very tiny, you can barely see it, but that's still considered a level. Those are the levels we need to be marking. And you'll mark these on the daily H4 and 1 hour. So if we look at H4, one here, one here, and one here. So there's several ways to go about the DM levels. The first way is you look for your setup and then you find your DM level in confluence with that setup. Or you can mark them first, and then, you know, as price is trading in there, you can look for the reaction and take a trade. But I just like to have them on my charts just so I know where I'm at in the price. And I'm labeling each one, right? So as this is trading here, I'm labeling it DM level H4. I'll go to H1. Okay. And, you know, typically I'm labeling them as close as to price as possible. And then I'll add more as price is developing. Okay, don't really see anything here. Here's one here. Okay, this allows me to scalp in high probability areas, especially when I have confluence stacked in my favor. Okay, for example, this QM level here. Actually, this one, I think we already passed that one. Okay, also other levels that I'm looking at are gaps, okay, because these tend to act as support and resistance. So in this area, you can see we had a gap fill and then price started declining again, okay. This one's already traded through, so I can actually delete this. Okay, I like to trade fresh areas. So fresh, they haven't been touched. So if they've already been moved through, I didn't see any trade opportunities to take, I just delete them off my chart. Okay. After I have all that set up, after I have my DM levels, my QM levels, my SNR levels, I can stick on M1 and just start trading off of it. Okay, I understand that I have a DM level below, I have liquidity void up here, or gap, however you want to define it. I have a support and resistance level up here. I have something down there. So these are areas that I'm looking to trade from. Okay, but there's also obviously other confluences, such as our timings. So for example, if I turn on our timings, we can see now at our timings here, inside our zone here, we had a drop. Okay, at our timings here, we had a rally. At our timings here, we had a drop. Okay, so we can stack these confluences. So again, you got to mark out your SNR levels. The reason I use the Renko is because it gives me whole numbers, right? 3,400. We all know that, you know, bank levels are important. So then I'm stacking then I'm drawing my trend lines. I'm understanding where my breakout is. I'm understanding where my direction is, okay, based on the market internals. And it'll give me a higher probability of being on the right side of the market. And then I have levels to trade from, okay? So it may look messy on higher time frame, but I don't care about that because I already did all my markings on a higher time frame. That way on the M1, I can just surf the M1 and get in and out of trades. So I can just put as much money in and get it out as quick as possible. Because remember, the more you're in the market, the more risk you're subject to. Okay, and then I have timings to also tell me when I should be looking for buys and looking for sells. Okay, let's go over one more thing, which is the volume. I'm going to go ahead and remove this. Okay, if we look inside our range from low to high, Okay, remember in my YouTube video, the thing I said was if you can't close above 62, it's most likely going to fall short. If we close above it, then the probabilities of going long are going to be in our favor. Okay, right here, we can see we had huge selling volume, but where's the result, right? We didn't get any more downward movement. So this pretty much absorbed all this price action here. Okay, so this all got absorbed with a lot of effort. Okay, so volume plus no effort or no what's the word I'm looking for, result, right? This is an indication that we might go bullish, right? So we closed like this on heavy volume. We can safely assume the next day that we're most likely heading bullish. Okay, you can see here from this range to this range, okay, sorry, from this swing point, not that swing point. From this swing point here, okay, we had this retracement. We closed above the 62, pulled back, and then we went bullish. We tapped into the 79. 79 is an important level as we tapped into it here with the confluence of our QM level in the same zone as our 79, pulled back into an S&D zone, and then we obviously dropped, right? But if we look at the volume, okay, so we can see at this period of time, there was a lot of buying, okay? Just pay attention to the green. Don't look at the length or anything at this point. We could just see that there were buyers in here. Then we had sellers come in, failed to push the market lower. We can see this declining buying volume, right? So here we see the effort, right, to push, but the result was weak. Then this candle comes in, you can see the volume here is starting to dissipate. Then we have our engulfment, right? We have an engulfment, we have a new QM level being built here. This engulfment is followed by an increase in sell volume. Then we have a push right here as a break and retest level. Price comes in, fills this inefficiency. We can see the volume here, indecisive, and then boom, we get a huge push with increasing volume. And then we look at this indecisive candle, which is basically a lot of effort, no result. Another push down, increasing volume, failure for a result, and then the next day we get a pop. Okay. So we just need to look at who is more in the market at this point, right? We had a lot of buying in here, and then from this point to this point, we could just see there was a lot of selling volume, more than there was buying volume. Just looking at how many sell candles there are, or sell bars there are, versus buying bars, right? We have 1, 2, 3, 1, 1, 2, 3, 4, 1, 1, 2, and then now we have buyers stepping in. Okay, so when you're on your charts, just to make it a little bit easier for you to understand, it's just look at where your breakouts are happening. Okay, these are our breakout levels, pattern levels, DM levels. So very simple, very simple.